Drills Talk. In this episode, we're going to discuss the fact that you need life insurance. Yeah, that's what we're discussing. We're discussing life insurance. We're going to discuss the types of life insurance. We're going to discuss why you need it. We're going to discuss that it's for your life and not actually for the death benefit. We're going to discuss the fact that it needs to be shared with everyone in your circle, that if they don't have it, they need it. Let's go.
Yo, Drills.
Created by the great wizard of the new world.
Drills Talk. In this episode, we're going to discuss the fact that you need life insurance. But before we get started, please like, subscribe, show your love however you would like to show your love. Here we're on entrepreneurship/mindset motivation channel. Every Monday, there's a new blog. Every Wednesday, there's a new Drills Talk. Thanks for listening. Thanks for watching. Thanks for subscribing. Let's get started. Number one is protection of all you've accomplished. Imagine busting your tail all your life, working hard, going through jobs you don't like, coming up short, losing everything, building it back up, losing it again, building it back a third time. Then you die and it's all gone. Like nothing's there because you have to take care of the things that you left and there's nobody to take care of it. It's nobody to hold on to it. Nobody to have the money to take care of what you left. So it just goes to waste. You lived all that time, you worked, you had all that stress, you tried and tried again, you experienced ups and downs, and it's all for nothing. We can't allow that. See, having life insurance makes sure that what you've worked for is still going to be around for people that you love to enjoy. Even if it's yourself, just knowing that when you die and you out of here, you know that all you worked for is not for nothing. That's enough for me to get life insurance. But for you, if that's not enough, you haven't worked for enough. So you need to get out there in your everyday and work hard, work for more, try to accumulate more, try to have more on your shoulders, because then you know, okay, I worked for all this. I've accomplished all of this. I don't want it to be for naught. I'm going to make sure I have life insurance. This is no paid advertisement. This is me telling you, talking to you, whoever pressed play on this video, that it makes no sense not to have life insurance. You're leaving a burden on the people who you care about if you don't have life insurance. You're leaving a hole, not only of you being gone, but in addition, a financial one if you don't have life insurance. And you're throwing away all the years that you've been given as a gift to be on this earth in the garbage if you don't have life insurance. What more do you need to know? You have to protect all you've worked for. And if you're not there in your head to where you have much to protect, you need to get out there, bust your ass, and then get life insurance in the midst of busting your ass. Don't wait until you made it, and then something bad happens. Number two is protection for your family. So you work and you accumulate things for your family, of course yourself, but for your family. Things start to go left with your health for some reason, or something all of a sudden occurs and you have nothing to take care of your family. You're the breadwinner, right? How is your family going to get taken care of if you're no longer here? So then the question comes in into, okay, well, how much should I have? How much life insurance should I have? It depends on your situation. Do you have a home? Should definitely pay off the home. Whatever your salary is, if you have a salary, it should definitely be 7 times that. You want to make sure that your family's cool, right? So you want to be able to pay off your house if you have a mortgage. You want to be able to pay off your debts. Anything that you have like a car or, a recurring payment on, in addition to 7 times your income. Why 7 times your income? Because it's going to allow your family to have funds to, replace you while thinking about what we can do to, replace you in the future. So they don't have to have I think jobs give you 1 time your salary. Some really good ones give 2 times your salary. But if you think about it, you're gone. They're scared. They pay off the house and then they pay off your debts. And then they look up and they have about 6 months to 12 months of funds left, if that. And they still have to pay for your funeral, got to send you out, right? Correct? You know what I mean? So you got to think about, they need ample amounts. If you could, the most you can afford basically is what you should get. Think about it. It's for your family, right? So the amount should be somewhere 10 times around your salary Or you can go the other way and do the 7 times plus your debts, including your house if you have one. So if you're worried about how much to get, around that amount is cool. Now, if you go in and you say, okay, well, I can afford this amount and it's no problem, then double it. There's absolutely nothing wrong with leaving more than you need. Not leaving enough is the problem. Number 3. Number 3 is multiple policy types. One, I'm going to start by telling you that there's no rule that you can only have one policy. So let's get that out of your head. You don't need to buy insurance and then cancel the other insurance you have because you're buying some new insurance. If you ever hear that, you should run away. You can buy as much insurance as you can afford. So let's start there. Now, the different types. If money's a problem right now, but you want to cover your family in case something happens, term life insurance is probably the most affordable. It'll get you a nice size amount for a very low price. But the thing is, that's all it does, right? It covers you for a term. So it may be 10 years, it may be 20 years, some go 30. But if you outlive that, you don't get any of those funds back. You really can't do anything with the policy. It's just a death benefit. That's why it's so cheap. You also have things like whole life, to where it covers you for your entire life, and it can even accumulate some cash value, which can be beneficial if something were to happen. You can add things and waivers in that covers your kids. You can do things like if you were to lose a limb or something, there's a cash payment. If you were to get ill, there's a cash payment that comes along with that, say, cancer or something else. But it's a protection for your entire life if something happens. And the best time to get life insurance is now if you don't have it, because as you get older and you get sicker, the price goes up and up and up. You can get term life insurance for a college kid for probably in the teens for a decent amount. But term life insurance for someone who's 60 is the same amount as if you were to get a whole life policy for a person that's in college. So make sure you don't procrastinate and get yourself covered with something. If you can't afford much, term life is the way to go. If you can afford more, whole life is the way to go. There's also other policies, and I'll explain 2 more. One is a return of premium. So a return of premium is good because a return of premium is going to give you back every dime that you spend on your life insurance policy. Let's say we had a term. I told you about the term, and it can expire, right? If you had a return to premium, now it's more, but you can consider it a savings account. You can consider like, okay, well, maybe I'm putting aside $200 to $300 in my savings anyway. Well, instead, put that $200 and $300 in a return to premium, and at the end of that term, you get every dime back. So yes, you are not fully covered for the entire, your entire lifespan, like a whole life insurance policy, but you get that windfall of money in one shot to where you can open up a different life insurance policy, and now you have the funds to do so. What I would do in that scenario, if I only had one and I only had a return of premium and I make it to the end of that term, when I get those funds, I would open up an IUL. It's an Index Universal Life Insurance Policy. It's probably the best living benefit life insurance policy that you can get. Basically what it is you take that lump sum that you have, you put it in your IUL. It has a death benefit. You have access to funds that you can borrow against. You are also tied to the market. So it's indexed, right? It's Index Universal Life Insurance Policy. So it's tied to the market, but you have the benefit of the ups, most of the benefit of the ups, and then you have no risk of loss. So your only loss would be the fees per year for having that form of a policy, which is way better than losing 5 or 10 or more percent if the stock market crashes. So it's a great investment tool. It's a great living tool because you can borrow against the funds that the cash value of the policy has, and you have that death benefit. Coolest thing about the IUL would be borrowing against what you think is the cash value of the policy. Let's say you take that, you have about $70,000 from your return of premium. Let's make it lower. Let's say you have about $40,000 of your return of premium. You take that $40,000, you open up an IUL, you put that $40,000 in there, you have access to borrow against up to 95% of that $40,000. And when you borrow against it, let's say you need $20K, you can invest in a business, you can take care of something, whatever. It doesn't matter what the reason is. But the thing is, you have access to that 20, and when you take that 20 out, that 40 that you put in still accruing interest and growing. And it doesn't come out of your, you're building a fund. So it's not your investment. It's the company who gave you the IUL giving you that money based on you having that amount in your policy. Let's say you take that $20K and you blow it. You made a mistake, didn't work out, whatever it was. Investment, a building, something. You wasted it, you gambled it trying to make it happen and it just went away, right? What do? Well, you can do one or two things. One, you can attempt to slowly put that 20 back in, or you can never pay it back and it comes out of your death benefit when you die. So if you had a $250,000 policy, it's now a $230,000 policy minus any interest, which it shouldn't be. If you really dig deep into IUL, it shouldn't be much interest there because the interest you're gaining for your cash value should outpace the interest on the loan that you took. You have to read into it. I'm not going to do an entire show on it. I'm not an insurance advisor. I'm not a licensed insurance person at all. I'm just giving you the goods. The goods are get your ass some life insurance. Thanks for watching. ItsDrills.com. Click the link. Let's discuss.